Hello, I'm Jason Bates, owner of Electrum Financial, where a mortgage is not just a flip of the coin. If you're looking to purchase or refinance and need a mortgage, I would love to be your lender of choice. And don't forget to subscribe to the channel. Would appreciate that. Tell your friends and family and hit that ring bell too. I kind of hate saying that, but it's one of those things we got to do making videos. Anyway, let's get right into today's video. And this is the pros and cons of FHA versus conventional. If you're a first-time home buyer, you may not know the differences, and some lender may just tell you what you want to hear, or maybe you did some research online, you read a couple things and you say, hey, FHA is the one for me, or conventional is the one for me. Well, hopefully this video will put a side-by-side comparison together. I will put a side-by-side comparison together to show you the pros and cons of each so that you can make the decision that's best for you and your family. So let's bring that right up. We're going to start off with FHA. FHA is going to be our first comparison here, the pros and cons. So let's start off with the pros. The pros being the shorter waiting period from an economic event. What's an economic event? The economic event is a bankruptcy, a short sale, forbearance, any kind of negative credit that may show up in your credit. This is an economic event. FHA waiting periods for you to purchase a home or obtain financing to purchase a home, that waiting period from that is much shorter. For example, bankruptcy, 2 years on FHA, where on a conventional will be 4 years on that. Second thing, typically you're going to get a lower interest rate if you have a lower credit score. So if you've got a low FICO, like 620, 600, even 640, you're going to get a better interest rate with that credit score on FHA than what you would get on using conventional financing. Lower FICO score requirements. So FHA doesn't really have FICO requirements. They kind of do. You can't get a loan with a 400 credit score set per se, but much lower credit score requirements for FHA. You may be required to put a little bit more money down with the lower credit score, but at least you can get a mortgage with that. A higher allowable debt income ratio. So FHA is a little more lenient when it comes to debt income ratio. So they'll go up to a 55% gross debt income ratio. That's all your debts combined plus the house payment can equal 55% of the gross income. So if you add up all your debts, divide it by your gross income, and that represents 55% or less, then there's a good chance you can get FHA. But there's a debt income ratio video too that you should pay attention to. So subscribe to that channel and you'll be aware of the debt income ratio requirements there. Next thing, cheaper MI with lower FICO. So if you do have a lower credit score, you're going to get a lower MI because on FHA, the MI, mortgage insurance, is set no matter what your FICO score is. So if you got a low FICO, you're getting the same mortgage insurance that somebody with a high credit score would get. So good for those individuals who have a low FICO. Lower down payment too. So typically, a lot of people think you got to have 20% down to go conventional, which is false, and we'll talk about that here in a second. But FHA minimum is 3.5% is the minimum for FHA. But again, as I mentioned before, if you have a lower credit score, you may be required to put as much as 10% down in that case. All right, so now let's talk about the cons of FHA. So higher total insurance costs, mortgage insurance costs, excuse me. So mortgage insurance, that's that monthly MI, right? Monthly mortgage insurance. Remember on FHA, there is a MIP, mortgage insurance premium, that's paid up front. That's included in the loan. You can pay that out of your pocket if you'd like. Don't have to. Most people don't. 99% of people do not do that. They finance that into the loan. That's equal to 1.75% of your loan amount. So that's paid up front and financed into the loan. Conventional loan does not have that upfront MI as part of that. Restrictive housing standards. So this is something that when you're making an offer as a buyer, you're putting your offer out there, the seller sees that it's an FHA offer. They may take a conventional loan over an FHA loan because FHA does have some higher standards when it comes to the house. Safety when it comes to FHA. So if you're looking at a house that maybe needs some work, maybe it has, pulled up carpet, or, maybe the stove's been taken out or the cooktop's been taken out and there's a big hole in the countertop, that's a safety issue and that would have to be fixed. And the seller may not be willing to fix those items to sell it to you using FHA. So I would say especially now more than ever, because it's so competitive out there with the short inventory, the low inventory, conventional financing is going to win 9 times out of 10 over FHA financing, especially if they have a good realtor out there. Okay, lower loan limits. So FHA, Maricopa County loan limit, you're all restricted on your loan limits. FHA is 331. I got to look down at my notes here because I don't do these all the time, but 331,760 is the max loan amount for FHA in Maricopa County. Now, that doesn't mean you can't purchase a home for $500,000. You can, you just have to put enough down to get your loan amount to that loan limit of 331. As long as you do that, you can do FHA financing, no problem. Now, this is FHA's only for primary homes. There isn't a lot of flexibility. There is no flexibility on that. It's only for primary residency. So if you're looking to buy an investment property or, second home or something like that, you're not going to be able to use FHA financing for that. The MI, too, mortgage insurance. If you're putting less than 10% down, 3.5% as an example, and no matter the equity position, then the mortgage insurance is for the life of the loan. There's no way to get out. The only way to get out of that is to either pay the loan off or sell the home. It's the only way, or refinance, I should say. Refinance the mortgage, which is paying off the loan, is the only way to get rid of that mortgage insurance. Now, if you're putting more than 10% down, then it's for 11 years. You have the mortgage insurance. No matter the equity position, you're going to have mortgage insurance for 11 years on that. So even if you're at 60% loan to value, you're going to have mortgage insurance on that property. Okay, so those are the pros and cons on FHA. Let's get into the conventional pros and cons. So start off with the pros on the conventional. No upfront MI. That's that 1.75% that I spoke about earlier. Cheaper PMI. PMI is private mortgage insurance, but it's going to be cheaper with a higher FICO, and it drops off at 78%. Now, most people think it drops off at 80%, but it's actually 78%. And it really is at the lender's discretion when it comes to that mortgage insurance. But it will drop off at 78% for sure. More terms to choose from. So you're going to have, adjustable rate mortgages. You're going to have different terms too that you can, 25-year, 29-year, 30-year, different terms that you can go with. You can do the same thing on FHA, just a little bit easier on the conventional side than FHA. FHA is typically a first-time home buyer. They want the lower payment, so you can do a 15-year on an FHA if you'd like. But I don't know that I would do that, especially if you have good credit, because you're going to have that mortgage insurance like we talked about before for quite some time. So you're 15 years to build the equity to get rid of the MI. So not many people go that route, but you can on FHA. But there are a few more programs on the conventional side than there are FHA. Higher loan limits. So Maricopa County, you can go up to $510,400 and fit under the conforming loan limit and not get into the jumbo financing. So 510 versus the 331. So as these prices increase, I am seeing more conventional financing because of the price points that conforming or conventional financing allows for. Now, if you're a first-time home buyer, conventional, you can put as little as 3% down as long as you have a 680 credit score and you are a first-time home buyer, which means that you have not owned a home in the last 3 years. So 3 years or less, you can put 3 years, over 3 years, I should say. You're a first-time home, then you're considered a first-time home buyer, and you have a 680 credit score or higher. You can put as little as 3% down to purchase a home. So you don't need that 20% or even that 5% down. Now, you can finance two different property types. So if you're looking to buy an investment property or a second home or an owner-occupied property, conventional financing is going to allow that flexibility, where FHA only allows for primary residencies only. And the appraisal requirements are lower. So I mentioned before, safety on FHA, where on a conventional loan, you can get away with not having some of these things fixed and get the financing you need. So appraisers aren't as stringent when evaluating the property and making comments on the appraisal to the seller that needs to be fixed. A little more lenient on the conventional. Hence why I said earlier, some sellers are more willing to go with the conventional buyer versus an FHA buyer. So there is that. Okay, so now let's talk about the cons. And I gotta say, there aren't many cons. So if you got good credit, high credit score, then there aren't many cons to conventional financing, but there are a few. So you do have higher FICO requirements conventional right now, so you need a minimum 620 credit score to get conventional financing. I'm sure you can get conventional financing with lower credit score. However, you need to put a lot of money down for that. Lower debt to income ratio requirements. I mentioned before, FHA is 55%. Conventional right now is at 50%, so a little bit lower debt to income ratio requirement, but still pretty high considering all things being considered, I should say. The mortgage insurance is influenced by the FICO. So the lower the FICO, the higher the mortgage insurance. So if you're in that 640 and below, even 660 and below credit score range, and you're putting the minimum down on the property, then your mortgage insurance may be higher than what it would be using FHA. So mortgage insurance is really determined by your FICO, your down payment, and the property type. If it's a condo versus a single family home type thing, those are really the big factors when it comes to mortgage insurance. So if you're checking a couple of those boxes on the mortgage insurance side, you're going to pay a higher mortgage insurance, monthly mortgage insurance using conventional. Now, 5% down for move-up buyers is the minimum you need to put down. So you can't do 3.5%. So on FHA, if you're a move-up buyer, as an example, you can put 3.5% down, no problem, and still get into that home. So on the conventional side, you got to put a little bit more money down to be as a move-up buyer. Still not that big of a difference, but money doesn't grow on trees, and so that 1.5% can be a deal breaker for some. And so conventional, last thing I'll mention here on the con side is that the underwriting isn't quite as flexible. On FHA, if you've got lower credit scores and you have that economic event, you can write a letter of explanation with a good loan officer and a good underwriter, I should say, then you will be able to overcome that objection from underwriting with a good letter of explanation. Conventional isn't so flexible when it comes to underwriting, so a little more tight, but again, with a good loan officer, you can work through that and still get conventional financing. So I don't want to discourage you from trying conventional, but just know that FHA is a little more lenient when it comes to those sort of things. So hopefully that gives you the side-by-side. And I know it was a little bit winded here. I know it's just over 10 minutes, so I do apologize about the long-winded, but there's some important information that I did want to get out to you in regards to the pros and cons of conventional financing. So again, if you're looking to refinance or need a mortgage to purchase a home, I'd love to be your loan officer of choice here in the state of Arizona. So please reach out to me. I would love to help. So until next time, have a great day and happy house hunting. Bye-bye.